Welcome back to No Dumb Questions, the Insurify podcast where we give you straight talk on coverage, claims, and savings. And I'm Sara, and this is our season 2 finale.
I'm Julia, and today's question is, how does where you live affect your home insurance, and why is homeowners insurance so expensive?
For sure. And today we have a very special guest returning to talk about this topic, the author of Insurify's home report, Matt Brannon. Yay.
Yay. Matt joined us last season to chat about the auto report, but if you forgot, Matt is a senior economic analyst and insurance correspondent here at Insurify. He's been a journalist for over 10 years and specializes in personal finance. And he is, of course, one of our favorite coworkers.
One of our favorites. So whether you live here in Massachusetts or you're in Florida or Nebraska or Louisiana, Matt's going to be able to explain what's going on with home insurance in the U.S. and what we can expect for 2026.
Let's get into it.
So Julia and I are here with Matt, hooked up on my antique headphones.
Antique is right.
And we've got some scalding hot questions for you.
So true.
Okay.
Scalding, foiling.
So Matt, what happened with home insurance in 2025?
Sure, thanks. So we've seen sort of a new era in home insurance over these past couple of years, really since the pandemic, and 2025 was not all that different. We saw higher home insurance rates. The average home insurance rate across the country went up about 12%. And a big part of that is due to the rising cost of building a home, rebuilding a home, repairing a home, as well as the rising damage that natural disasters and severe weather are causing across different parts of the U.S. Certain parts are being affected more than others, but in fact, if you exclude hurricanes, 2025 was the most expensive year for natural disasters in the U.S.
Wow.
So the home insurance industry has a lot to think about right now.
For sure. And so premiums rose in 2025, yes?
Yeah, we saw a jump. We've seen premiums go up over the past couple of years pretty significantly. They've risen 3 times as fast as inflation since 2021. Wow. And a big part of that is because of the rising cost of rebuilding a home. For example, to build a home, the same square footage on average, 2019 compared to now, the cost has gone up 40% or more in some areas. Wow. When you have that type of increase alone, that's going to be a big driver. And then, of course, natural disasters are another factor. So when natural disasters strike, insurers not only have to deal with a lot of claims all at once, but these claims tend to be more expensive than the typical claim as well, because disasters can cause so much damage. So they are big liability events for insurers, big financial liability events, that is. And we've been seeing more of those in recent years as a result of severe weather.
Yeah, for sure. So what are we looking like for 2026?
Sure. So in 2026, we do expect rates to continue rising. A lot of the dynamics that have caused rates to go up in the past are not going away in 2026, more than likely. But we do think their increase will be smaller, maybe 4% compared to 12% last year. So yeah, that's progress. That's good news for homeowners. Basically, the broad reason behind that is that loss ratios, basically the ratio of money that insurers were spending on claims, the amount they were taking in premiums, it got better for insurers in 2024 compared to 2023. Not incredibly better, but it was an improvement. So there's not, at least broadly on the national level, there isn't as much financial pressure on insurers to raise these rates, because insurers, the margins in insurance are not always very big, and they have to be very careful around how they set their rates, because if you set rates too high, your customers are going to leave and look for a competitor. If you set your rates too low, you run the risk of being in a real financial hole if there's a natural disaster. And we have seen in recent years places where insurance companies are spending more money on claims than they have made in premiums. So it goes to show just how significant these mounting losses are becoming.
Yeah, for sure. Yeah.
I mean, that smaller increase is encouraging. Right?
Yes.
So that's something. Awesome. Okay, Matt, so any interesting trends you're seeing or noticing in the market for 2026?
Sure. So one thing that insurers are really interested in right now is the rising activity of severe convective storms, which are one type of natural disaster, just like hurricanes or wildfires. And while those tend to get more of the media coverage, they're a little more interesting visually in newspapers and on TV. But severe convective storms are becoming something that insurers are very interested in because they bring lightning, they bring heavy rains, they bring strong winds, which can turn into tornadoes, and they bring hail, which is driving a large share of claims out in the Midwest and the Great Plains states compared to what it was doing in recent years. In fact, if we look at the number of damages, financial damages in terms of monetary insured losses, 2025 was the third most expensive year ever for insured losses for severe storms.
Wow.
Third most expensive on record. Number one and number two were the two previous years.
Wow.
So it sort of illustrates just how more important severe storms have become for insurers, and they're causing different trends in how insurers evaluate risk. For example, a lot of insurers are treating roof claims differently now and roof policies and roof coverage. So they might only cover the actual cash value of a roof as opposed to its replacement cost value. Because to cover the replacement cost value would be very expensive for the insurer, and it risks really hurting them financially if they do see a big surge in claims. So that's one trend to watch out for. Another thing that we've been seeing in the news lately and is pretty sort of unconventional from maybe what most people think of in terms of insurance pricing is social inflation. Now, we know what inflation is. Social inflation is a little bit different. It's non-economic factor that can lead to insurance becoming more expensive. And one of the most common examples here is jury rewards. So when an insurer has to go to court and then gets embroiled in a lawsuit and has to pay a settlement as a result of that, those damages can influence how insurance rates move. And there was a Swiss Re analysis. Swiss Re is a big reinsurance company. Found that social inflation drove a 57% increase in U.S. liability claims in the past 10 years. And it's interesting to think about because, the sort of pop culture psychology around jury trials and juries wanting to maybe be harsh around what they see as corporations, dealing with individual homeowners. It's something that is increasingly becoming a factor for insurers. So that's something else that doesn't get as much coverage, but is interesting to think about it and how it influences insurance. I would also mention this is on a much smaller scale, but the U.S. is currently at war with Iran. And while its effects on the insurance industry are probably not going to be incredibly strong, it could actually influence home insurance rates on the margins because some of the home insurance costs that we pay are for the materials we have in our homes, like our possessions, our belongings, our TVs, and our clothing. And a big part of, or at least this, clothing is notable for how it plays into this pricing. And clothing prices are something economists have told us could go up as a result of the war in Iran. And if that happens, basically it means you need to cover more things in your house. The value of total things in your home is now higher. And if you're adjusting your insurance rates to keep up with your replacement costs, then that definitely could result in higher premiums down the line.
Yeah, an interesting development, if you will.
That's one word.
Yeah.
Yeah.
Okay. So all that being said, right now, what is the most expensive state? And I think we can probably guess.
Do you want to take a guess?
On three. 1, 2, 3. Florida.
That's right. I don't know if you can tell I'm wearing my Florida tie today. It's got little alligators on it.
Oh, perfect. On theme.
Yeah, very on brand for home insurance. Home insurance in Florida. Florida has led the nation in recent years in home insurance costs. We don't expect next year to be all that different, although the state has taken a lot of steps to try and prevent home insurance costs from rising as fast as they have.
Okay.
And some of those are starting to show returns, so there's some optimism there. But overall, Florida is likely to remain the most expensive state for insurance. People here in my home state pay around $8,500 a year for home insurance in Florida, which is it's nearly triple the national average.
Yeah.
So, while people in neighboring states like Georgia or Alabama might be paying, they still probably more than average, but compared to Florida, residents in the state just have a much harder time. And a large part of that is because of hurricane risks. A lot of homeowners make the mistake of thinking, flooding from hurricanes could really affect my home insurance. Flooding is normally not covered by home insurance, so you would need flood insurance to cover those damages. But the high winds that come with hurricanes are something that generally home insurance would help protect against. So those wind claims as a result of hurricanes can be catastrophic. The damage from the 2024 hurricanes was maybe around $100 billion combined.
Wow.
For hurricanes Helene and Milton. So Florida, for that reason, is likely to remain at the top of the list. Louisiana is second right now. We actually think Louisiana could move down to third by the end of the year, behind Oklahoma.
Okay.
But for right now, Louisiana and Florida are being driven very strongly by hurricane risk. Oklahoma is more of a severe wind story as well, but sort of a different flavor of severe wind with the Midwest, the hurricane risk, as well as hail risk. So those are the states that are seeing sort of the biggest increases right now, or the biggest, at least the highest prices currently.
Yeah.
What's interesting state that's not on the list is California. And I know we're probably talking a little bit more about California later. So
Yeah.
yeah, I'll save that.
Yeah, so I guess still in that vein, any good news? Any states seeing decreases, even small ones?
Sure. So there are some states seeing small decreases on the margin. For example, we expect states like Hawaii and Massachusetts to maybe see small decreases of 2% or so in their rates. And that's because auto rates have a higher chance of coming down every once in a while. Home insurance rates are less likely to go down after they've gone up compared to auto insurance rates. So broadly, what you're looking for in home insurance when you're looking for good home insurance news, you're just looking for maybe increases that are smaller than they have been in the past. So Louisiana, we're forecasting things to be pretty stable this year. The state has taken some steps to invest more in its disaster mitigation. And recently, there was a lot of legislation, a lot of legal activity going on in the state that could result in less pressure on home insurance pricing, basically. One interesting thing that they signed into law was a bill that would require insurers to inform people what they had paid in the past and how much, like what the actual increase that they're going to be facing is. There are changes around how much money is devoted to disaster mitigation programs. There's changes in state law to be a little bit more cautious around what they're allowing insurers to do.
Okay.
So yeah, that's an interesting story to watch. Different states take different approaches. Even the state's insurance commissioner in Louisiana was against those ideas because he was basically, to paraphrase, of the idea that it would make the state less friendly to insurers and it might discourage insurers from wanting to do business there.
Sure.
So yeah, there's many different philosophies on how insurance is regulated, and Louisiana will be a state to watch in terms of how things could change in 2026.
Yeah, for sure. I mean, Louisiana has really struggled with home insurance in the past. So we're rooting for you, Louisiana.
So true.
Okay. So what are insurers doing in the home insurance space right now?
Sure. So a few things to talk about. One, so insurers are always trying to balance the risk and their rates, the
Yes.
financial risk they face for paying out claims and the rates that they charge. And to limit their risk, there are other steps that they can take. Rate increases are not the only way they can compensate for risk. They can also try and reduce their risk through things like reducing the financial vulnerability of a policy. So if that would mean actual cash value for roofs as opposed to replacement value, and just trying to find ways to limit their exposure, basically. So, what would be a much more expensive claim if they were required to replace a full roof to a replacement cost extent is going to cost the insurer more money than it would to replace, or at least to pay them for the actual cash value of the roof that's being modified. So
Mm-hmm.
that is something that insurers do to try and sort of limit their costs without raising rates. Because if they did, that's what insurers will tell you. If they retained replacement cost value, that they would have to raise rates more because it's simply, in terms of the math, it doesn't add up financially for them.
Yeah.
It's a liability. Another thing here is, especially in Florida, hurricane deductibles are basically a way that insurers are trying to account for the risk of hurricanes while not having rates go up as high as maybe they could. So instead of having your hurricane coverage wrapped up into your main, or at least being the same as your typical home insurance policy, it's sort of a separate portion of the policy that would apply only to hurricane damage, and you would have to cover the homeowner would have to cover more of the upfront cost. But the idea is that it keeps premiums lower in the long term. So that's one trend. Yeah, those are a few of the main things we're seeing.
Yeah.
There is some interesting activity going on in California as well, but since we were planning on talking about Florida and California later, I'll wait until we do that.
Yeah, we'll get into it. Yeah.
Sounds good. So you've gotten a little bit into it already, but can you talk a little bit more about what factors are making home insurance so expensive?
Sure. So insurers are facing higher costs basically and higher financial liabilities than they were in the past. So as we talked about, the average cost of replacing a home is up about 40% compared to before the pandemic. Right off the bat, that just means a home that was worth, that maybe an insurer was looking at a potential $100,000 claim is now looking at a $140,000 claim. So that's a greater financial liability to them. And then you have the fact that maybe in that first scenario where it was a $100,000 house, that was also existing in a time period where there was less severe weather activity.
Yeah.
So maybe the chances of a big claim on its own were lower. So not only have the chances of a big claim gone up, but now also the amount that claim would cost has gone up. And basically some states in the Midwest are very interesting examples of this. For example, Illinois has gone from maybe the 19th most expensive state for home insurance to now part of the top 10.
Wow.
Yeah, just as a result of expansion, more as cities get bigger and people expand, there's now more property at risk. There's, if you build a house somewhere, there's more financial value now at stake there than there was in the past. And then you also have increasing rates of hail and severe wind.
Mm-hmm.
There's some interesting evidence that rising temperatures are causing the hail season to be longer than it had in the past, as well as making individual hailstones bigger. So, a lot of times you see hailstones compared to sports equipment like golf balls or tennis balls, and we're seeing more reports of, maybe tennis ball sized hail than we have in the past. So
Okay.
those hailstones come down and they bang your roof, they bang your car roof, and they cause a lot of damages to you and your neighbors, and then your insurer is on the hook to pay for that. Of course, they've taken in your money and premiums to help account for it, but sometimes if the event is big enough, it can exceed the amount they took in. Nebraska is another Midwestern state where insurers actually spent more money on claims than they made in premiums in 2024. And that's, these are very large amounts of money. So it takes a lot for the entire insurance industry to end up spending more on claims than it did in premiums.
Yeah, for sure. I mean, I don't think that people really think of plain states as being so vulnerable, but they really are becoming more vulnerable because of that hail issue, for sure.
Yeah, the severe convective storms that you're speaking to.
Yeah.
Yeah, it's interesting. When we think of home insurance, our mind goes straight to Florida and California a lot of the times, but the plain states are really becoming a big point of focus in the insurance industry. In Colorado, for example, they just did a pretty interesting analysis of home insurance claims and found that hail in some parts, depending on the county, accounts for up to 54% of home insurance premiums. So, if there were no hail there, your home insurance premium would be half of what it otherwise was. Severe convective storm activity is going up across the Midwest, and we're also seeing tornado activity shifting east as well. So there's a lot of developments going on, and insurers, home insurance is one industry where businesses can't afford not to pay attention to how the climate is evolving.
Yeah, for sure.
Okay, so Matt, can you walk us through the effects of natural disasters in 2025 on home insurance and maybe what we could be looking at for 2026?
Sure. So I guess maybe the biggest one to talk about is the LA County fires in
Yeah.
2025. These fires are actually, according to one of the reinsurance analysis we've looked at, they would be considered the two most expensive fires in world history for insured losses.
Wow.
So,
Ooh.
yeah, basically the amount of money that insurers are having to spend on these fires surpassed any others. It also did nearly $62 billion in economic damage, and it is sort of it has centered the focus of the home insurance industry in a way on these rate increases in California and how local governments are dealing with proposed rate increases, state governments rather,
Yeah.
especially in California. And then I would also say hurricanes are another big thing to watch. So the Colorado State University releases a annual hurricane report, or rather multiple reports, sort of. But they are currently projecting around a 43% chance of a hurricane in Florida
Okay.
for 2026. That would be ahead of Louisiana and North Carolina at around 28%. These are, of course, probabilities. It's hard to know exactly what will happen, but basically, we do expect that severe weather will continue to be something to keep an eye on. Flooding, wildfire activity, severe storm activity, all of the indications are sort of pointing towards these trends continuing in 2026. So there's something insurers will have to brace for. 2025, luckily, we didn't have a big hurricane hit the U.S. in 2025, which is relatively unusual. So that did almost help a little. Well, it did help insurers spend less money in that respect. So
Yeah.
it remains to be seen how that lack of hurricane activity and what this year's hurricane activity could do to insurance rate.
All right. So you've hinted at it quite a bit. But can you talk about our two big states, California and Florida, and how they're approaching home insurance?
Sure, yeah. I didn't even mean to hint at it so much. I guess I was just secretly excited to talk about it. But it's sort of interesting because, at least broadly, there's sort of two states that are taking different approaches in terms of how they're dealing with home insurance crises. Both have serious home insurance problems that they need to solve because severe weather is simply making the insurance industry untenable for a lot of the insurers there, and it is something that could blow back on homeowners, and it already has in a lot of ways, especially in Florida, as we see the highest rates in the country. Now, in California, what's interesting is California does have lower than average home insurance rates at a state level. That could change as insurers evolve to address heightened wildfire risks, but as of now, they do tend to have, or they on the national average have lower than average home insurance rates, and part of that is because of the way they regulate insurance rates. So you can sort of think of insurance regulation as a spectrum in terms of, at one end you have very business friendly, and one end you have maybe more consumer oriented sort of price protection on that end. And then so Florida is definitely would be considered one of the more insurance friendly business models. They allow insurers to set rates and enact them before they've been approved by regulators. They still need to be filed with regulators, but insurers basically have freedom, whereas in California, they have to get each proposed rate increase approved.
Yeah.
Proposed rate increases over maybe 7 or 10% trigger an automatic public hearing. What a lot of insurance industry people will tell you is that California is sort of trying to, regulate rates into being manageable, and Florida is trying to take an opposite approach around opening it up to competition. It's more of if we are very friendly to insurers, more insurers will come to our state. If they're able to be successful in our state, then there will be plenty of competition, and then homeowners can pick the best available product for them, the lowest price for them.
Sure.
That maintains their needs. Whereas California, is trying to basically ensure that whatever rate increases go forward have been heavily vetted and are being approved before they go into effect. So we expect home insurance rates to go up around 16% in California on average in 2026, which would be the biggest increase in the state. So it is possible that, increased wildfire risk is catching up to the state in terms of its home insurance rates. State Farm has already had a 17% average rate increase approved for homeowners. So that is in line with what we expect. They actually initially proposed a further 11% increase on top of that, but then as a result of discussions, they're no longer pushing for that. So
Okay.
at the same time, Florida is actually, if you go on to the Florida Government Insurance Commissioner's website, you can see that rate requests in the past 6 months are down 3%. The average rate is 3% lower. So it does seem like some of the changes Florida's made to make the state more business friendly could also be having some positive results, especially around excessive litigation and what was considered by insurers to be frivolous litigation. Florida at one point was absorbing 79% of lawsuits over home insurance claims, despite only accounting for maybe 10% of home insurance claims. So,
My goodness.
yeah, it was very much a place where legal costs were driving up insurance rates. So we've seen around a 30% decrease in what Florida insurers are spending on these costs. So it could lead to positive results for homeowners in the Sunshine State.
All right. So we'll see what happens, I guess. And you'll be back here to explain it to us.
That's right.
Right. Just cross our
so-
fingers for no hurricanes.
I know,
Yeah.
right? Seriously. So Sarah and I have talked about this a lot on the podcast, but can you just give us kind of your overview for how homeowners can save on their premiums?
Yeah.
Sure. So even though premiums are going up and that a lot of people are feeling pressure from them, there's still steps homeowners can take to make sure that they're getting the best available price for their needs. So one of the easiest and simplest ones is to compare home insurance rates. Companies like Insurify are a great place to do that. And I will say that a lot of people sort of default to just assuming that their current home insurance rate is, why should I change it? Why can't I just stick with this? But as we've talked about, over the course of this podcast, home insurance rates are very volatile. And even though rates tend to go up over time, in the broad national sense, there are still individual companies that are sometimes lowering their rates in certain areas. So it's really important to constantly check. We did a survey recently where a high percentage of people basically said, I believe I could save more money on these costs if I spent more time researching them. So they were basically pretty straightforward in admitting that if they spent a little bit more time looking into what they could be paying for insurance, then they might be able to turn that into real savings. I would also say it's helpful to overall improve your credit, improve your financial status, because home insurance companies often look at credit-based insurance scores, which are slightly different but very similar to credit scores, as an indication of how likely a homeowner might be to file a claim. So if you have a better financial history, basically, that can result in lower insurance premiums for you, because now the insurer thinks we might not have to spend as much money on this homeowner.
Yeah.
Yeah, and then I would also add two other things. Check for government grants and discounts, especially in the Southeast, hurricane-prone areas. There's been a big surge in both governments that require home insurers to give you a discount if you make certain home upgrades. There are maybe 10 states now in the U.S., mostly in the Southeast, that if you upgrade your roof to a certain standard, your home insurer is required to provide you a discount. And then there are also states that have come up with these grant programs to provide grants or even matching programs, which, if you put $10,000 toward your roof, the state will also put $10,000 towards a roof replacement. Now, these programs are not, you have to apply for them in many cases, and often the number of applicants exceeds the number of people who are approved, of course, but it's worth looking into, because, the opportunity to upgrade your roof and not only lower your premiums, but also just have some peace of mind that your roof is safer, your family can sleep better at night.
Yeah.
That's something very helpful. And then lastly, just don't underestimate the extent of discounts that are offered for home insurance. A lot of people have seen commercials around bundling or maybe loyalty discounts, but there are other discounts that people don't know about. For example, one that was interesting to me when I learned about it was senior citizen discounts. Some companies will provide discounts to seniors because in theory, if they're not working, they're spending more time at home. So if there's a disaster at home, like a fire or something like that, they're able to respond quicker to it and minimize the damage faster than somebody who is not at home would be.
That's
So
so cool.
Yeah.
yeah, it's
That's
an
really cool.
interesting way, just sort of can give us an insight into how insurers think about risk and all the different things they take into account in pricing.
Yeah, for sure.
Good point.
Well, thank you, Matt. We really appreciate it. And we'll definitely link the report down below so people can take a look at it. It's pretty great.
Awesome. Thank you. Yeah, if you can't get excited to talk about home insurance premiums, what can you get excited to talk about?
Exactly.
Red flags come in all shapes and sizes.
All right. Well, thank you, Matt, so much.
Thank you, guys.
So as we learned from Matt, whether you live in an expensive state or a cheaper state, it is always worth it to compare quotes and discounts to see if you can find a cheaper rate. It's always worth looking.
Yeah. And if you're interested in reading the full home insurance report, it'll be linked below.
A big, big thank you to Matt for joining us today. We hope you found this helpful and you can compare quotes using the link below.
Yes. We'll be back soon for season 3 of No Dumb Questions. Get excited. And until then, stay informed and save money.
You're listening to No Dumb Questions, an Insurify podcast. This content does not constitute personalized financial or legal advice. This podcast is written, produced, recorded, and developed by Sarah Getman, Julia Taliesin, Riley Hines, Sydney Harrell, and edited by Angelica Coleman. Compare insurance quotes by clicking the link below.